Some views on top-down macro drivers. So if you see, these are some of the issues that have dropped their head in the last 6 months, and at various points in time, these are the issues that have hindered the market's movement. In fact, they have pushed it down. So in the last 2 months, obviously, we have seen a lot of rhetoric on the tariffs that the USA is going to impose. Very briefly, our view is that India probably should be one of the least impacted countries. India is having a very low dependence on trade as a percentage of GDP. We are more a consumption-led economy. We are also trying to develop manufacturing and investing. Trade, somehow we have not been able to do much. So, and in fact, this is an opportunity for us, this in a way that is being forced down our throat. What? The rationalization of tariffs. Our tariffs were out of sync, absolutely out of sync with the developed world or even with the emerging markets. So that's why we used to struggle to get into any multilateral trade treaty. Even bilateral treaties where agreements were not easy for us to settle because of this only. So hopefully this should be leading to a good outcome actually, this pressure on the tariffs. And in any case, at the bottom line level, if you see, the new USA regime has been much more severe and has been much more aggressive against most other large trading blocs and countries. So with India, they have been relatively less combative. So let's see how does the outcome go. But at the same time, I would be less concerned about this in terms of final outcome. Currency, yes. US dollar has started weakening. I would say it would be good if for some time US dollar weakens from India's perspective. Monetary policy is moving in the right direction. Government CapEx last year had really dwindled, so as to say. It had disappointed a lot even after the elections were over. For 6 months almost, the government CapEx continued at a very low level. So practically there was no growth. But now, and that has been a big driver for India's economic growth in the last 3 years. So last year it was missing. Last year, as in like the fiscal year 25. So next year, again, there are signs that it should improve. And the government also has come up with a decent target. So I think that over the next 3-4 years, we should be expecting 12-13% per annum. And this should again lift up the investing side of the economy. Fiscal policy, again, the government has been very disciplined. So that is one of the positive points so far. Even in the last 6 months, on this front, no economist has been complaining much. So I think the government's balance sheets are looking very strong in terms of the trends from here. And finally, what does it translate into economic growth? So I would say that the fastest growing economy tag should continue to stick to India. So 6 to 7% growth should be expected for the foreseeable period. So I think that is not going to change. Then one more thing that has taken a toll on India's stock markets has been the corporate earnings. So Nifty 50's earnings growth, those companies that form the Nifty 50, their earnings growth in fiscal 25 will be quite sluggish, not more than say 6%. So versus 13-14% that had been achieved in fiscal 23-24. So that was a big disappointing factor for the markets. What we are expecting is next year, fiscal 26, they should improve. And FII flow has been detrimental. So that also has some change in store. I'll show you. So this is about the government CapEx, if you see. So fiscal 26, it should improve. Corporate earnings, last 20 odd years, the increase has been 11% per annum. So fiscal 25 will be quite depressed. But 26 again should be a rebound. So that should lift the markets in our view. And this is about the FII flows. If you see on the left-hand side, all these periods of FII outflows have been followed by equally strong inflows, except for one or two occasions. So generally, after some time, this also is a very cyclical thing. So, for example, for some 2, 3, 4 months, people have been saying that China has become more attractive. So yes, it'll go and it is gone. But beyond a point, just like portfolio managers try to keep diversification in their portfolio, similarly, foreign investors also want to diversify. They would not want to be concentrated into one country. So at some point in time, they should start coming back. I don't know when, but it has to happen at some point in time. It will happen in the future, always in the history.